Okay, so now let's try to understand the percentage of accounts receivable method, which is like how much percentage we are earning from accounts receivable and how much bad debt we need to record. And so let's take the example to understand this method. So there is a company whose name is Delta Airlines and that sells flight tickets only, not only directly to passengers but also through corporate accounts just like travel agencies and business clients. At the end of the year, Delta reports accounts receivable of $80,000 from these customers. So they are going to receive $80,000. Based on its experience and the industry conditions, Delta estimates that 2% of receivables will not be collected. These 2% won't pay you the money. For example, smaller agencies going bankrupt or the customers disputing charges. There may be situations like that, right? So before year-end adjustment, Delta allowance for doubtful debts already shows 1000 credit balance, right? Now they you know that this company is already having $1000 as in their allowance account. So this is their box wherein the one second. So this is their box wherein $1000 is sitting right now. So this $1000 is sitting there. Now we know that the company determined out of this 80,000 2% won't be received. So out of this 80,000 2% meaning 16,000 won't be received. So this bucket should have total of $16,000 worth of provision, right? And we know that right now there is a sitting already, because this may be possible that they have created this provision last year or period before that. So this $1000 is already sitting there. So they ask that how much provision do we need to create. So we know that we need to put how much additional $600 within this I can say curtain or carton or box. So effectively this will make $1600 at the end, and that will ensure what was being told. So out of these 80,000 2% won't be collected. The 2% becomes 1600, and out of that 1600 1000 was already there. So how much provision you create in this year? The question is this year. So you will be saying $600. So you will be saying adjusting for existing balance and giving it as $600 provisions. So they will be simply saying they need to increase the allowance by $600. Now you need to pass the accounting entry. This $1000 was already there. So we need to pass the accounting entry for the balance amount, right? So the balance amount is $600. So the accounting entry will be again like bad debt debiting and the allowance for doubtful debts crediting. So we need to pass this entry bad debt debit to allowance for doubtful debts. So this entry has been passed. Now the question says that if instead the allowance account has a 1000 debit balance, which means that there is no balance, or I can say there is a negative $1000 balance in this bucket, which means that this happens because we have wrote off exceeding whatever the earlier estimates were, which is like if there are more bad debts compared to your provisions, then this situation may happen. And the company is saying we need to keep 2% bad debt provision of out of this $80,000. So we can say the $80,000 into 2% gives us 1600. Now we need to bring 1600 within this bucket. So how much provision do we need to create? So we need to bring $2600, right? That's then effectively this minus 1000 and this positive 2600 will create positive 1600 that we want. So here we will be creating a provision of 2600. So we go and pass the entry of bad debt account debit 2600 and allowance for doubtful debts of account 2600. So this is a very important method and questions are being asked based upon this method as well.